Matt Orton is Chief Market Strategist at Raymond James Investment. We also have William Lee, Chief Economist and Executive Director at the Milken Institute, who's with us. Gentlemen, great to have both of you here. Thank you very much. Prashant this side. William, if I can start with you, a quick word on the developments over the weekend. Of course, market reaction is pretty muted, as I began by saying. Across the board, oil's up 2%. Equity markets, not very much. Neither here nor there, so kind of sort of moving on. But markets will wait for how Iran responds. In a counterintuitive way, since markets are not responding in an aggressive way, William, do you think if Iran's response is actually a weakish, symbolic kind of response, there is a downside for oil from here?
Well, you have to remember that the amount of oil that Iran produces is potentially at the 3 million barrels per day level. But because of sanctions and the war that's been going on, the latest reports are that its exports have been down to about 150,000 barrels per day. That's about the same production as we have in the state of Montana. So the impact on the oil market has already been felt. And yet you see that oil prices are only about $78, which is where it was back last January. I think the Iranian reaction that's where the huge amount of uncertainty is. I'm sure that there'll be Iranian proxies and sleeper groups that are being activated, and acts of terrorism around the world will be something that everyone will be watching out for. But in terms of how that affects markets, that is not something that I think can be systematically priced into markets. It's a global act of terrorism, potentially aimed at the United States more than elsewhere, but certainly aimed at U.S. allies as well. And I think the markets right now have such a diffuse level of uncertainty over so many possibilities that markets really aren't reacting right now. But I think the cloud of uncertainty certainly is much broader now than it was before the strike occurred.
No, absolutely. Point taken. Matt, same question to you. If this does not escalate and the response from Iran is small, even this $15 surge that we've seen in oil, it'll disappear pretty fast because there is spare oil capacity. And my question is there actually, in a counterintuitive way, if you think about it, more downside rather than upside from here?
Yeah, good morning, Prashant. It's always great to join. And I would agree. I've been telling clients over the weekend and writing a note that, it really depends on how Iran reacts. But right now, the probability of one of the left tail scenarios is still fairly low. Iran's very constrained with respect to its options. The reaction to whatever Iran does is going to be quite negative if it does take some of those more left tail scenarios. And so while this is not a market I would be chasing higher, I would be looking for signs of a de-escalation in the coming weeks. And I think you do have the potential to see oil prices come down if there's any more certainty. I also think that there's the potential for the dollar to continue to weaken, even despite its strength, once we get a little bit more certainty or maybe a little bit more visibility through the policy fog that we have right now. So I just don't see, at least based on what we know today, based on the reaction that's more likely to come from Iran, I still think that the macro fundamentals that are underpinning the rally that we've had globally speaking still remain in place. And I would be biased to use weakness opportunistically, especially as investors who are looking to broaden, get more diversification, and potentially find ways or investments that they haven't been able to lean into yet so far.
Interesting to hear that, Matt. Let me go back to Willem for a question. Willem, would you concur with that view? Because the market, at least this morning, seems to be thinking that in that sense, it'll still remain limited. No one's expecting a very big reaction out of Iran. And I think from the market's perspective, as long as the Strait of Hormuz is open, yes. I wouldn't say it's business as usual, but business goes on. How would you gauge the situation right now from that perspective?
That's the absolute key. If the Strait of Hormuz remains open and Iran is not able to muster the military action it takes to close the strait, then I think it'll be business as usual because as I said, the Iranian supply of oil on the market is really trivial. But the key is Strait of Hormuz, where 20% of the world's oil supply goes through. And that will be a real game changer if that does get closed. But from what people tell me, the military actions required to do that are significant enough, and given that the U.S. has sent several aircraft carriers and military ships there, if they were to mine the straits, I think the mines could be cleared relatively quickly. So the kind of uncertainty that of real spikes in uncertainty are pretty limited, and the kind of buy the dip strategy that has worked so well, I think will probably continue to work in this situation, because it looks like the fighting will be fairly contained, barring these unusual kind of radical terrorist attacks all over the world.
Good morning, gentlemen. Good to see you all in. Matt, you have been using opportunities like this to buy the dip, right? And I recall you were quite bullish on this travel leisure kind of space. IndiGlobe is one stock that you like to make my trip as well. Would you be using this dip to buy into these names?
Yeah, Nigel, it'll be interesting to see as we head into another quarter end, how results may have been impacted by some of the tragedies over the past 2 weeks or so. I'm still biased to use downside opportunistically, because heading into these disruptions, the fundamentals were incredibly strong. The bookings on Make My Trip looked very, very attractive. The fact that InterGlobe continued to buy ahead of the number of fleets and jets that we were looking for and anticipating, all of that's very, very bullish. And their expansion, not only domestically within India, but outside of India, has tailwinds, and that's something that doesn't get disrupted because of a tragic event. So while the humanitarian side of what's happened over the past few weeks might put a hold or might make people want to wait a little bit for a trip, I still think the more pervasive long-term demands of a growing middle class, those secular growth drivers that I've talked about, really wanting to lean into, I think those still remain firmly in place. And I am a buyer, especially if we do start to get some increasingly good news. So I'm paying attention to a lot of just real-time data, travel statistics, all of that, to really help guide when to make additions to those names.
No, I think points taken. So, the other thing is, again, there were all these on news channels that were saying World War III and this and that and all that, right? I mean, whether this is going to trigger this and that. Actually, if you think about it, if anything, this actually... so those who were opposed to the U.S., there was a lot of uncertainty, right? Whether U.S. under Trump is going to do something or not, whether they will actually use its force, whether it's not going to, or they're going to keep talking. I mean, that famous...
Imagine the trick. I'll decide in 2 weeks' time.
2 weeks, right? So it almost became
24 hours later, the bombers were there.
Yeah, but there is a reason for that, by the way. But anyway, that's not my point. Is that now with these use of all these bombers and these the 30,000-pound bunker busters, which had never been used before. I think it's a very decisive message to those who are that U.S. will bring about and bring to bear its considerable power on Iran and elsewhere if needed. So actually, if anything, this kind of presages the end of what people are calling as funny, but people are using World War III like so easily, right? I mean, a third World War is starting or whatever. I would argue in the opposite sense that there is certainty now that U.S. There's no doubt that U.S. the most powerful country in the world is going to use its force decisively if required to end it.
If it wherever it feels it's warranted. Yeah. I'm just reminded of a term that we had in social studies class way back. I don't even remember. It's been so many decades back. Yeah. Remember the word hegemony?
Yeah, of course.
The use is back. I think this is exactly what we're seeing.
Yeah, no, absolutely. William, of course, is still with us. William, I don't know if you have any thoughts on that. It's a larger question. It's not related to financial markets. Maybe it is. But I don't know how you think about this. William.
The whole notion of geopolitical risk now, I think, has been shifted. The notion that the U.S. is the most powerful country in the world and is willing to use its military might when the just cause is there and a clear danger is there, I think shifts the balance of power somewhat. U.S. has asked China and Russia to intervene and do something, and has been asking this for so long. And I think it's shown that their political clout, as mighty as we thought it was, they're not willing to use it, whereas the U.S. is willing to use it to help its allies. And I think that's a big shift that the political scientists and financial analysts have to take into account.
Okay, fair enough. Okay, Matt, let's talk markets. What's to be done? We don't know. It's from MAGA, it's gone to MEGA, make Iran great again. We don't know what's next. From a market perspective, what should one be doing? Buying what kind of markets? Risk assets? Dollar? Just give us what you do, say, over the next couple of weeks.
Yeah, first and foremost, keep calm and carry on. This is not the time to be panicking in the market. What we're seeing here is it's just another brick in the wall of worry that the market has continued to be able to climb. At least based on how events have turned out so far, this is what investors need. We need some sort of uncertainty so that a lot of the bears continue to come in, have a narrative that the bulls can finally continue to keep climbing. And I think as we get into the next 2 weeks or so, we're going to be moving into earnings season. And so there's no reason for investors to do anything right now. Unless you have idiosyncratic factors that happen, like we just talked about with Make My Trip, Interglobe, within specific parts of the market, there's no need for investors to be aggressive. Wait for the market to come to you. If there's more of a sell-off based on this hyperbole around World War III, which I think is greatly overstated, that's a great opportunity because the underlying macro fundamentals still remain in place for this market. And so what I like right now is strength in some of these durable growth themes, like artificial intelligence, or at least tangential plays to artificial intelligence, leaning into growing parts of the market that have continued to deliver strong fundamentals. So within India, for example, which remains a great complement to global portfolios. And you're seeing that with these rebalancing, money continues to keep moving into India as its markets remain strong. Look for some of these long-term durable winners like an M&M. We've talked about that quite a lot, but the company has done so well because management are masterful execution, and they have a number of models that are just being released that have a lot of strong demand for them. And the company has a number of growth gems along the side that can further support the underlying fundamental business of autos and farm equipment. So there's a lot of companies like that across the market. And when there is downside in the market, like we had a couple of months ago, that's the time to be opportunistic and add your position going forward.
But William and Matt, thank you very much for joining us. Great speaking with both of you here on CNBC TV18. It's a pleasure as we track these developments, and we'll sort of come back to you over the next couple of days.